All right, well, I'm excited about multi-family commercial property in Los Angeles going forward.
Well, we always, on the National Real Estate Cafe, by the way.
I left that to
you. We always let you know what's really happening in the markets and the direction and trends and all that good stuff, because one report does not make a trend. And you're going to hear all kinds of reports, and you've been hearing them for years, by the way, about how a recession's coming, the bubble's coming, the market's slowing down, and one report comes out, oh my gosh. So we keep showing you where there's growth in the real estate market and the financial markets and so forth, and the economy, at least here in the U.S., yes, there are some areas potentially slowing down. Maybe we're slowing down a little bit, but we were pretty overheated after coming off a 10-year downturn. So this is another sign of growth.
All right, so let's take a look at this real closely. So CRE thinks that one city will lead growth next year, and that's great. I don't want to focus on one city. I want to focus on the actual reason why this is happening. The thing that was interesting is that Denver moved from number 6 to number 1.
No, actually, that was Boston.
Boston moved from number 6 to number 1, and closely followed by Denver and Los Angeles. Great. Okay, 3 fantastic cities. And if we were to dig deeper as to why that happened, it's jobs, 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 jobs.
Right.
It's no magic trick that people will flock to where there are jobs, and investors will flock to where they think people will go. And so the reason people have also flocked into these areas is there's these areas called opportunity zones, and you'll see that right there in the middle of the page. 45% respondents agree that investment in opportunity zones will increase in the next 12 months. Opportunity zones are specially tax-benefited areas, and Los Angeles has a bunch of them, that will help you avoid capital gains on your investments moving forward. It's not easy. It's not for the day one investor. It could be. You need to do a lot of homework, but you can take advantage of this if you'd like to in Los Angeles. We could put you with a specialist that's going to put you in touch to do that. But the point here is really that if you looked at commercial investment a few years ago, maybe 2 years ago, those cap rates were sliding from 6 to 5 to 4. And then when everything slowed down a little bit, right, when interest rates went up, you started to see those cap rates go up because things started sitting on the market and people weren't so sure that commercial real estate investment was a great idea anymore.
Real quick, cap rate?
A cap rate is basically the return that you can expect on the money that you invest, as simply put as possible.
That's what I was just saying.
Yeah. So 6% return, 5% return, or 4% return.
It's not the cost to put a roof on a house.
When it got close, when it got closer, just under 4%, you started wondering to yourself, why would I buy an apartment building and be a landlord to get 3.8% return on my money? That just seems crazy. And so that turned the market, and the market started to slow down. And you could always tell when the market slows down because your phone rings like crazy if you own any commercial property. People are trying to sell stuff. Then what was interesting, as soon as rates dropped, now all of a sudden everybody's super excited because you could actually still get a 5 on some properties. So now you're getting 1.84 on your treasury or 1.7 on your treasury investments, and you can get 5 or even 4.875 on a safe investment rental. So remember that it's not always about the return you can get on your money in one product. It's the relationship of that product to other products that you can get return on your money for.
So again, the smart money's still going into multifamily.
Yep.
That means there's good investment going into it. They feel that the economy is going to stay pretty strong, and that means the bottom line also, as we've been saying, we don't have enough supply out there, not enough inventory, because we didn't build homes for 10 years, and millennials are blowing up all over the place, the largest demographic there is. So we need more homes.
One more nerd thing. Foreign investment capital is pouring in like crazy to buy commercial property and to buy investments because it is a safe place to put money that actually has some sort of reasonable return. Germany, interest rates are negative 0.5. Britain, interest rates are 0.5%. So 4.5% or 5% in real estate sounds brilliant.
Yeah, good stuff. All right. Hopefully this is great information to either know or share with your clients, share with your real estate agents, lenders. You guys all need this great information. So subscribe today. You can get this sent right to your phone by texting NREC to number 58885, or go to donandgino.com. Check out all our YouTube channels for the Don and Gino Real Estate and Finance Show and the National Real Estate Cafe. Subscribe today.